Hey guys, today we're talking about investing during a recession. I'm a certified financial planner, and today I'm going to help you learn how to grow your wealth in a recession and not lose money. We're going to talk about 5 don'ts to practice during a recession and 5 do's to practice during a bear market. So first of all, don't sell your assets just because it's a bear market. Look, when the market starts to tank, everyone goes crazy and they sell whatever they have and they put it all into cash or into gold. And then when the market comes back up, they've made the mistake and they've gotten out and they've used their emotions more than their minds. You want to be smarter than that. So the worst thing you could do is to sell your investments at the bottom. But so many people do this. They buy high and sell low. That's the exact opposite of what you want to do. You want to buy low and sell high. That's what we're going to talk about in this video. Secondly, don't try to time the market. If you are trying to call the bottom and then put all your money in, you're going to make some grave mistakes. People try that and they lose a lot of money. Rather, you're going to dollar cost average. What that means is you're going to invest regularly and systematically. Put in $1,000 a month or whatever you can handle as an investor. But don't put in the full nest egg that you have at one time, because then that is a more volatile practice. So when you put in, say, $1,000 a month and you buy, say, 30 shares one month and then you buy 20 the next, but then you buy 50 the next, you're making good systematic investments. Thirdly, don't buy into volatile investments. People love to buy commodities and futures contracts and these speculative investments, Bitcoin, oil futures. We've seen some crazy things during the coronavirus pandemic of 2020. You want to avoid these speculative, risky, more volatile investments and go with good investments for the long haul. Fourthly, don't use short-term money to invest in the stock market. You should have an emergency account of 3 to 6 months of living expenses that will help keep you afloat in times such as a recession. That money you should be putting in your savings account, a CD, or a money market account, and whatever you have above that, then you can put into your retirement accounts and investment accounts. That way, if your investment accounts go down in value, you aren't freaking out because you don't need the money now, and you can leave it invested so that it will grow for the future. All right, so now let's talk about some do's since we've talked about the don'ts. So one thing that you can do if you have a taxable brokerage account and you have some stocks or mutual funds or ETFs that have gone down in value is you can sell them to harvest a loss and then buy into similar investments, but not strikingly similar investments. So the IRS has a rule called the wash sale rule, and it prohibits you from working the system to create a loss that isn't really there. So let's say, for instance, you have 100 shares of Coca-Cola and you sell it on December 31st, 2020, and you sell it for $60,000. And then you buy back the same shares January 1st, 2021 for $60,000, but you had previously owned that stock for more, and then you try to take a loss, the IRS will prohibit you from doing that. What you can do is you can wait 30 days before you buy such an investment. So if you lost some money in a recession, sell the stock, harvest the loss, wait 30 days, and then buy a similar investment. This way, you can save a lot in taxes. And saving taxes is like your investments performing well. You want to do anything that you can do to grow your wealth. So we definitely want to harvest losses in a recession. Also, this is a great time to buy into the markets. So you want to buy into good companies that will last a long time, buy value, buy strong. You want to buy stocks because they're on sale. Buy companies that have been around forever, like Warren Buffett and Benjamin Graham say. buy companies that you know will outlast this recession, and you will be so glad in 5, 10, 20 years when you look back at how much money you've made. You can also buy high yield bonds because they're going to be cheap during a recession. People want out of those because they're underperforming, but they pay a dividend and they're going to go up in value after the recession. Do be conscious of your emotions. So many people invest according to their emotions. There's a whole field of study on this called behavioral finance. This is the study of understanding why people invest the way that they do. A lot of us are hardwired for survival, and we make decisions that can help us stay alive, but don't necessarily make our portfolios perform well. One such way of thinking is called the sunk cost fallacy. That is the idea that an investment, you've put so much into an investment that you would hate to get out of it because you've just put so much into it. You're just waiting for it to turn around. Maybe next year it will perform better. Like maybe it'll finally come around and perform for you. But the problem with this is you just end up sinking more and more money and more opportunity cost into this investment, and it just keeps underperforming for you, and you need to get out of it. That's an investment that would make a great candidate for the tax loss harvesting we just talked about. Also, do consider your unique opportunity in investing. Maybe you work for a company that's going to come strong out of the recession and you can buy some company stock during this time. Or maybe you see the housing market in your area is now a buyer's market and you can buy that rental property and put that in a self-directed IRA and do something like that at this time. You have your own unique opportunities. So if you're good at something that you think you could learn more about that specialty or about that industry and invest in that, that would be a great opportunity for you. Do invest during this time more than you normally would. Now is a great time because, like I said, stocks are at half price. So you want to max out your retirement plan contributions at your work, whether it's a 401k or 403b. You also want to max out your IRA contributions and put some money in a taxable brokerage account. If you have money above and beyond your emergency fund, putting that money into the stock market during a recession is a great way you can grow your wealth. We've talked a little bit about how you can invest during a recession. For more information about how you can grow your wealth and achieve your dreams, subscribe below.